Hey everyone, welcome back to Corporate Decoder, the place where we dive deep into corporate filings and come out with the juicy details you actually care about, so buckle up, because today we are looking at LTC Properties Incorporated. And let me tell you, their latest report is not just about numbers, it is about a strategic move that could reshape their future in the senior living space. Alright, so LTC Properties Incorporated, or LTC as they like to call themselves, has just dropped a report detailing a pretty significant acquisition. It sounds like they have been busy adding to their portfolio, and we are going to break down what this means for them and for their investors. So what did LTC do? They picked up 5 senior living communities in Wisconsin. That is a total of 520 units. Now this is not just a small purchase. This is a strategic expansion to grab more market share in a growing industry. When you think about senior living, you are thinking about a demographic that is expanding rapidly, and companies like LTC want to be at the forefront of providing those services. Now let us talk money. This whole deal cost them a cool $195 million. That is a substantial chunk of change. The filing tells us they funded this by using their existing credit line, which is like a approved loan they could tap into. Then they used money from loans that were paid back to them, and also from selling their own stock. This tells us a few things. First, they are leveraging different financial tools to grow, which is pretty standard. Second, they are confident enough in their future to sell more of their own stock. Using their line of credit means they are not completely draining their cash reserves, maintaining some financial flexibility for other opportunities or unexpected needs, the proceeds from loan payoffs. And stock sales are also smart ways to get cash without taking on too much new debt. It is a balanced approach to funding growth. This kind of acquisition is exactly what you want to see from a company focused on growth in the senior living sector. It is a clear signal that they are actively pursuing expansion and are not afraid to make big investments, especially when the market presents opportunities. It shows they are committed to increasing their asset base and their revenue streams. Looking at the date of the report, the 29th of September, that is when this acquisition was finalized. So this is fresh news, and it paints a clear picture of the company activities right around that time. They are not just sitting still, they are making moves to capture more of the senior housing market. What is really interesting here is how this fits into LTC's overall strategy. They are a real estate investment trust, or REIT, that focuses on healthcare properties, specifically senior housing and healthcare facilities. By acquiring these 5 communities, they are directly strengthening their core business. This allows them to collect more rent from tenants who operate these facilities, and this rent is a major source of income for LTC. Their stock is traded on the New York Stock Exchange under the ticker symbol LTC. So if you are an investor or thinking about becoming one, this acquisition is a key development to watch. It directly impacts their assets, their potential earnings, and their overall value in the market. It is a tangible step indicating their business is evolving and growing. And who signed off on this report? Caroline Chickhale, the Executive Vice President, Chief Financial Officer, and Treasurer. Caroline is essentially the financial architect of the company, and her signature means that the company's leadership is fully on board with this filing and the strategic direction it represents. It is a formal stamp of APRO. V. Al from the top. So what is my take on all this? LTC Properties made a bold move acquiring these senior housing communities. It is a sound strategy to grow in a sector with clear demographic tailwinds. The funding mix seems reasonable, demonstrating financial agility. They are not just buying assets, they are investing in the future growth of their rental income and expanding their footprint in a critical industry. A potential risk to keep an eye on is the operational success of these newly acquired properties. While LTC owns them, they typically rent them out to operators. So the success of these communities also depends on the tenant's ability to run them efficiently and profitably. Another thing to consider is the broader economic environment. Rising interest rates or a slowdown in consumer spending could eventually impact the demand for senior living. But for now, LTC seems to be making a calculated bet on continued demand. Overall, LTC is showing signs of a company that is actively managing its portfolio and aiming for expansion. This acquisition directly aligns with their identity as a healthcare REIT and positions them for continued growth in the coming years. It is a promising development that shareholders will be watching closely. Alright, that is our deep dive into LTC Properties Incorporated's latest filing. What are your thoughts on this acquisition? Does it make you more bullish or bearish on LTC? Let me know in the comments below. I love hearing your insight. Now, if you found this breakdown valuable, do not forget to smash that like button and subscribe to Corporate Decoder for more straight talk on corporate finance if you want to join a community of like-minded individuals discussing finance and investing. Check out our Discord server, linked in the description below. Thanks for watching, and I will see you in the next video.